When you trade live, is it over just voice or voice and video? It's both. It's voice and screen sharing. So what you guys are seeing now on screen is what you see when I'm actually streaming during market open. So I have usually these three charts up. So 15-minute, 5-minute, and the 1-minute. I've asked some of our members, would they prefer just the 15, 5, and 1, or do they want the multi-time frame? Because I do have higher time frames like the daily, the 4-hour, the 1-hour, and even ES up for SMT. But the consensus so far has been just these three time frames. I think it's maybe a little bit easier to see when I'm streaming. But I do have voice and video, right? So you get to hear a whole lot of me talking and just kind of narrating my thoughts. I just sort of think out loud, let you guys kind of get in the mind of a profitable trader and just, why I'm taking setups, why I'm not taking setups, what I'm expecting to happen, right? I don't usually take a setup randomly. It's not like, oh, hey, I'm in a trade. It's more like, if we sell off down here, we sweep this sell side, um, something like that, and, we get a reaction from a lower fair value gap, right? Then I'm, kind of narrating you guys through what I want to see. So it's both voice and video. Mike says, what is my pre-market routine? What am I looking for? That's a great question. So my pre-market routine, as you guys probably know, I post daily in Outlooks, right? So every morning before the open, I post my overnight price action report, um, what I think the New York draw is, and then some explanations behind that. And that also includes, you know, I'm looking at higher time frames. So I jump onto the daily and I annotate, is previous day high intact? Is previous day low intact? Right. So journaling that out just to see overnight, are we still an inside day? Did we break yesterday's high? Did we break yesterday's low? Et cetera, et cetera. And then I'm looking at intraday timeframes as well, right? Like the hourly, the 4-hour, and I'm looking at what fresh fair value gaps we have or what fair value gaps we're reacting to. And I'm showing all of this on my screen right now in case you guys did not see the live. But yeah, so I'm looking at liquidity, right? Like let's say we'll just go back to Friday. We'll pretend Friday hasn't happened yet. I think a 15-minute would be easier. So I'll blow this screen up. This is a 15-minute. We're just going to look at Friday's price action. So this is my process when the market opens or before the market opens. Right, I come in here. I'm looking at overnight price action, right? So I see all this slow grind up. We're obviously above Thursday's high right here. So I'm journaling that. Okay, is previous day high broken? Yes. Is previous day low broken? Clearly not. It's all the way down there. So we are bullish overnight. And then I annotate how much of a move we had in points, right? If it's 100, 200 points, that's fairly normal. If it's 250, 300, 300 plus points, then that's a huge overnight move. And that just puts me a bit more aware as far as what to expect for the open, right? If we moved an entire daily range overnight, then I'm not expecting crazy movement during New York. But if we're still, within our daily ATR, then I can say, hey, okay, New York is probably going to come in and expand. Obviously, Friday was a bit unique because we had CPI. So that greatly boosted overnight action. But even then, I still journal that CPI sent price higher. We still have data low intact. We formed a fresh 15-minute fair value gap. So on Friday, I did say, I want to see this fresh 15-minute fair value gap tapped at the open and then a reaction. And from there, we might continue higher. And then if we look at what happened, we opened and that played out exactly like we expected it to, right? We tapped that fresh 15-minute and price moved up higher, creating a new high of day. So that's part of the pre-market prep. That's what's happening the morning of. Sorry for that echo. That's what I'm doing the morning of, generally about an hour, 30 minutes before, just so most of the overnight action has happened, right? I don't want to do my pre-market prep 2 hours before the open because there's still a whole lot of activity that could happen in those 2 hours. And then, I'm formulating my New York draw. What am I expecting at the open? So in this case, I was expecting 15-minute fair value gap to be tapped and potentially new high of day, which is what happened. And that entire sort of checklist is in my daily journal template, which is free. Just message me and I'll share the Google Doc with you. You can make a copy, etc. Do I only trade NQ? I do. I do only trade NQ. I've always, I 4 years ago I was trading options, right? So I was looking at equities, and that was a complete headache, right? Having to go through. If you see my screen right now, I was looking at all of these stocks every single morning, every single evening before the next day, looking for setups, right? What did I want to trade tomorrow? That was a world of complications in and of itself. So once I left options, I came to futures, and I'm like, you know, NQ is volatile enough, ES is volatile enough that I don't need to be switching back and forth between the indices. But I actually started my futures journey with just ES. I wasn't even on NQ. ES, as you guys know, trades a little bit slower. NQ and ES, and same with the Dow and the Russell, they all move in correlation, but they move at different speeds, and that's where SMT comes from. So, perfect example, like right here on Friday, NQ had tapped this 15-minute gap here and then broke for a new high of day here. ES did neither. Okay, so ES was mimicking the same movement, right? It came down a little bit at the open and then came up, but it never broke either liquidity zone to the upside or downside. So, I traded ES for maybe 6 months to a year. Um, this is almost 3 years ago, and then 2 years ago I switched over to NQ, and I haven't looked back. I mean, there's so much opportunity every day in NQ that there's no need to look at other assets or commodities or indices, right? Mathematically, ES is $50 a point and NQ is only $20 a point, but NQ moves at like 2.5, 3 times what ES moves at, right? So if ES moves 1 point, NQ has probably moved 3, 4 points in that same amount of time, right? So 3, 4 times 20, $60 to $80 versus $50 on ES. Is there a time where an ES breaks and NQ doesn't? What do you mean break? I mean, there's certainly times. So here we'll throw up a comparison chart. There's certainly times when ES will make a new high and NQ doesn't, or vice versa, if that's what you mean, and that's where we get the term SMT. Yeah. I mean, NQ, ES, they'll break different zones at different times. But if I can, let me see if I can do something real quick for you guys. All right, so if you look at my screen, what I'm going to do is throw up. Give me a second to make these look a little bit better. I'm going to throw up ES on the right and NQ on the left, and we'll compare. Right, so I'll show you that difference between the indices, like we saw on Friday. So symbol interval, there we go. So ES is on the right and Q is on the left. We're going to look at 5-minute charts, and we're going to look at Friday morning's price action. So this is that fresh 15-minute gap I'm talking about on NQ, and this was our high of day. Okay, so keep that in mind. We scroll back on ES. This was ES. So this was ES's fresh 15-minute gap here, and this was high of day. You see at 9:35, NQ made a new, well, that's a terrible drawing. NQ made a new high at 9:35, right? ES at 9:35 was still all the way back here. It didn't make a new high until about 2 hours later at 11:20. Okay, so NQ moved up, made a new high on the day, continued moving up. ES took about 2 hours to break its high of day. That's an example of SMT. And same thing down here at the lows, right? NQ swept this low, tapped into a fresh 15-minute at 9:30, right at the open. ES did not do that. It actually never came back down there. So that's the difference in the indices. Cool. Yeah, that's SMT. Now, the term is overused, and people say, oh, I'm long because we have the setup here and we have SMT. Half the time, ES eventually comes back down and breaks that. So don't get too hung up on that, but just pick your tool. What do you want to trade? I like NQ. It's more volatile. If you're starting out, maybe you go with ES. It's a little bit slower. What is my entry indicator? What tells you that it is the right time to enter a position? Okay, so this is kind of a broad strategy question. It's a good question. I mean, it's a very important question for sure. I don't use any indicators, and maybe that's not what you meant, but my entry model in and of itself is 1 minute and 30-second inversions, but I use higher time frame narrative and confluence to take those trades, right? So I have plenty of videos and Google Docs in the Discord covering this entry model, but essentially, I mean, it's just, I'll draw it out right here on screen. If prices come down here, let's say we have relative highs, we drop down, we sweep sell side liquidity, and in here there's a bearish 1 minute fair value gap, right? Everyone should know what a fair value gap is. If my bias is ultimately bullish, which in this case it would be because of these relative highs, let's say we also have a fresh fair value gap up there. Price swept this sell side liquidity here, reacted, and then the confirmation, the actual entry confirmation, is a close above a prior fair value gap. And that's where the term inversion fair value gap comes from, because this was an FVG formed on a bearish leg. Price has a reason to react and reverse. It does so, and then it closes above. That is an example of a bullish entry for me, right? So I would go long here. I'd probably target this internal high here, stop maybe at the low of the FVG, and that's my trade. 24 points, that's more than enough for me. Most of my trades are 10 to 15 points with a risk reward of about 0.85, 0.9, which is a whole different discussion in and of itself. A lot of people are surprised to hear that I have a less than 1-to-1 risk reward ratio on average, but that is how we have an 89% win rate, right? You can't have a 2-to-1 risk reward ratio and have a 90% win rate. You would be the richest man on earth if you did. All right. R, what's up, man? Welcome to the group. I will get to your question here in 1 second. Let me just make sure Mike got his question answered. Mike, there's a ton of resources as well, man. Look at the context guide that I published on Friday. I'll at you in general chat about that. Yeah, so check that out. That'll help you see the model a bit more as well. But essentially, to sum it up, my entry model is lower time frame inversion fair value gaps when higher time frame context aligns, right? When we have a reason to reverse, when there's context, that's when I look for an entry. I'm not basing my entire trade thesis off of a 1 minute or 30-second entry. If you do, that is where a lot of people get misled and they start just being too zoomed in and looking at those lower time frames, and then they wonder why they don't have the high win rate that I do. I look for a litany of factors, right? I'm looking at, and let me actually just try and screen share. Well, okay, I don't think I can switch my screen share without ending it completely, but if you guys look at announcements, look at the announcements channel after this call, look at the guide I published on Friday. It's called Context 101, completely free for everyone. So things I look at before I take an actual entry is the daily setting that price is in. Is it a trend day? Is it a range day? Do we have news? Blah, blah, blah. I look at higher time frame draw on liquidity, which in this case would be these relative highs. I look at manipulation, so price selling off. I look at liquidity sweeps, which is right there. And then higher time frame fair value gap delivery. That's another thing. So let's say we had a fresh 15-minute gap here that we tapped and reacted to. Perfect. And then discount and premium, right? So basic 50%. Obviously, this is a long and a discount. This is an A+ setup to me. Okay, that is my entry, and vice versa for shorts. Just flip everything on its head. So R says, I'm new, was going to test on demo and just learn for like a week, then just start with 1 or 2 50Ks with Apex. Okay, good plan. Never use Trade-Evade, only tried with Project X. Okay, so it sounds like you're familiar with futures in general if you're using Project X. So I'm not going to tell you, hey, start on paper trading first. I think you're beyond that. But Trade-Evade is great. Trade-Evade is really simple, very clean UI, right? You configure it how you want. So you can configure a depth of market, like a DOM ladder where you have all the prices. You can have your charts, obviously. You can have account details, so how much drawdown you have left, your profit target. I love it. I've used Trade-Evade for 3 years straight. I have not considered switching to Project X or Wealth Charts, any other platform. And they have a built-in copier. That's probably my biggest draw to Trade-Evade is the built-in copier. So, if you have 20 accounts eventually. That should be the goal for most of you guys. You can break that up. You can do 5 groups of 4, 4 groups of 5, 2 groups of 10, 15 and 5, whatever you want to do. Um, Super solid. I love Tradeovate. How long are your trades usually open? I know some firms have a minute. Yeah, I mean, I scalp, right? So, like I said, I'm taking entries on the 1 minute and the 30 second. So my trades can sometimes be complete within, the next candle. So a minute or 30 seconds. Sometimes they're a bit longer. And we're going to review some trades right now, but I'm generally in a trade for, I would say 30 seconds to 5 minutes, right? Sometimes a trade might take longer, like 10 minutes, if price is just not volatile. But if I'm taking a trade, just after the open, everything lines up, it usually goes pretty quick. Again, I'm usually targeting about 10 to 15 points. So with such a small target, that can happen like that. And that's why I love it, right? If you guys have spent any time on trading YouTube, you know of Lance Breitstein. He is like an 8-figure trader out of New York, like actually on Wall Street, right? And he has multiple interviews where he even says it's easier to have an edge on a lower time frame. And he references like a 2-minute chart, right? It's easy to be right about the next 2 minutes versus trying to be right about the next 20 minutes or 2 hours. You're just demanding less from the market. And my entire perspective when it comes to the market is, hey, if 99% of people are losing traders, right? If 99% of people cannot be profitable over years, what are they doing wrong, and how can I be different? So most people are demanding too much, in my view. So I flip that, right? I don't need too much from the market. Let me get in, let me get out. And having, it's all about boosting your edge. Having multiple confluences, having that higher time frame support, that narrative, understanding your weekly and daily bias, understanding news, understanding seasonality. Some people would call that overkill because I'm only trading a 1 minute and a 30 second. But to me, it's like, this is a hard business that we're in. Trading is hard. So let's do everything we can to have, confluence on our side. So that's my long-winded way of answering your question. I'm usually in a trade for a couple minutes. How many contracts is best for a 50K account per trade? Risk is like 500. Yeah, good question. So with Apex, your 50K drawdown is $2,500 at max, right? So if you start biting into that, obviously it'll be less, but you start out with 2,500 bucks. And that's what you need to base your risk percentage on, right? It's not, a 50K is just the name of the account. That's not, your actual account size. You can lose $2,500 at most, so that's what you should calculate risk on. I would not go above $500 per trade. $500 per trade should be, you really have your edge down, you have your model defined, and you know what an A+ setup is. That's when you risk, in this case, 20% of your account on one trade. And yes, it's a prop firm, it's not real money, and you're only invested, 200 bucks, whatever, into the actual account. But the problem is, even a great setup can fail. So I would say on a 50K, the right size to trade is 1 mini at max. Like if you really have your edge down, you back tested it, you understand your expected value. 1 mini is good. It only takes 10 days of $250 a day to get a payout on a 50K, right? You make about 2,600 bucks. You can withdraw 500. So if you can be consistent for 2 trading weeks, right, 10 days of trading, you can essentially get a payout, right? But most people never get a payout. So less is more. 1 mini is the maximum size I would trade, and I would seek about $250 per day. Have a max loss on the day of maybe $400. That way it would take 6 max losses on the day in a row to wipe you out, which is very unlikely if you're trading properly. Yeah, slow and steady is the way to go. But don't, slow and steady in the beginning, yes, learn everything. But once you really know how to trade, at the end of the day, we're trading prop firms for a reason. Be aggressive, right? When you have an edge, don't be afraid to use some size, right? It's not a cash account. You're not risking your actual cash in it. but that's down the line, right? So in the beginning, start out slow, and then slowly increase. Maybe after a year of consistency, um, then you go up to 2 minis per 50K, something like that. But it also depends what your balance is at, right? Do you have full drawdown? Are you close to profit? Are you in profit? When you should downsize is when you're actually risking profits that can be withdrawn. So if your balance is $3,000 in a 50K, you don't need to be trading 2 minis anymore, because if you take a loss, that's real money taken away from you and what could have been a payout, right? So various factors there. If you have full drawdown in the beginning, don't trade more than a mini, in my opinion. If you have a 150K, that's double the drawdown. If you have $5,000, I like to trade 2 minis, um, sometimes 3, but that's my personal preference based on where I am. Well, you can withdraw more than $500. I just said that because you know that's the soonest you can withdraw. Is Apex requires a minimum payout of $500, right? So if you need to get to a balance of 52,600 and have 8 trading days to qualify for a payout, at which point you can pull out $500. But until you reach 2,600 in profit on the account or 8 days, you cannot withdraw. The maximum payout though on a 50K is 2,000. So you get up to 54,100 on the account balance, right? So 4,100 bucks of profit, you can withdraw 2 grand on the account. But generally, my advice is, if you guys have never gotten a payout before, or you're earlier in your career when it comes to prop trading, just take the money. We're don't as in don't go for the home run payout. Don't go for a full 2 grand payout if you've never gotten a payout before, right? If you can pull out 500 bucks, 1,000 bucks, do it. It's not about having a life changing payout. It's just about getting paid, right? Covering your expenses, netting a profit at the end of the month. We're in this business to make money. At least I am. I'm not trying to be the world's greatest trader. I'm not competing with anyone for who can pull out the biggest payout. I'm solely going for a nice, good salary week by week, month by month. 10:23. Okay, so we took a short on Friday at 10:23 Eastern, which was right here. Okay, so this is an example of a trade. All right, so you guys probably saw it was profitable, but without showing, what came after, this is when I had my entry signal to take a short. So what is the context that price is currently in? There's a few factors. We had swept high of day here, right? This was our high of day, which we swept on this candle. So that is number one. That is our higher time frame liquidity sweep. High of day, low of day, that's always a major point of liquidity, right? Obvious reasons. So that is factor number one. Number two, now trend lines, I don't rely on trend lines by any means, but I do use them as confluence when appropriate. So in this case, we had this little bullish trend line. It's not perfect. I'm not worried about that, but it looks something like this, right? Prices continually making higher lows and not breaking this trend line. So bullish trend, right? Obviously, in an objective to sweep high of day, which happened there. So that's some of our higher time frame factors. And then we get the 1 minute inversion right here. Now, I don't usually love trades that sweep liquidity or take out lows, prior to me getting in a short, right? For this example, it's a short, so I'm going to refer to downside references. But, we took out all of these lows prior to the close of this 1 minute candle, right? And my trades are always on the close. I enter when an FVG is closed above or below, not while price is in it. I need a candle to actually close above or below. You see here for 1, 2, 3, 4, 5, 6, 7, 8, 10, 12 minutes, we were respecting this 1 minute fair value gap, right? Price was continually bouncing right out of it before we eventually closed below. So that's my actionable entry to go short. I took this on a bit of a retracement. Stop on this, I believe. was something like it was either the high of this displacement or the high of this little swing high right here, and I was targeting these lows down here, right? So something like this. My risk reward was about 0.8, 0.82. Um, so I'm looking to get short on a little bit of a retracement, being that we just swept high of day. We broke this trend line. We have our bearish 1 minute inversion. So at this point, I'm tagged into my short, right? Still in the trade, looking for an exit at these lows. And there we go. We break this recent low, and somewhere here, there's our follow through, and that's the exit, right? I'm generally getting out at whatever swing low, swing high is nearest to price, provided that it gives 10 to 15 points. In this case, it was just shy of 15 points. That was probably my favorite short on Friday. What's my second favorite prop firm? Top one futures, but my plan is to scale into them after I'm maxed out on Apex. As of recently, it's been take profit trader. My focus has really been Apex. I don't really love Top Step. There's no real advantage for me, being that I scalp, right? I don't need end of day drawdown. That doesn't really do anything for me. And Apex is really easy to sort of milk payouts on after the first payout, right? After you make, let's talk about a 50K account again. After you make that initial 2,600, you pull out 500 bucks. There's your first payout. Your balance is 2,100. Okay. All you need to do is make another 500 bucks, and you're back at payout, right? You're back at that 2,600. You do need 8 days. So in those 8 days, hopefully you make a little bit more. Let's say you get to a balance of 3,100. Then you pull out 1,000, right? So my point is, anything you make after your first payout on Apex is essentially real profit. After that first buffer is complete and you get that first payout, it's very easy to continually milk payouts from them. That's why they're my favorite. And of course, the scaling, 20 accounts, blah, blah, blah. My second favorite, though, I would say right now is Take Profit Trader. For one reason, daily payouts. Okay, anything you make and withdraw, I think it's above 250. If you make more than, you can withdraw any amount, but if you withdraw less than 250 on a daily basis, there's like a $50 fee. That's ridiculous. So, if you make 300 bucks, you can withdraw $300 the same day once market closes and their data updates. That is basically a cash account, right? In my mind, there's no reason to be trading a live cash account when you have prop firms that'll give you daily payouts. So right now, TPT, Take Profit Trader, and Apex. Apex still number one for me, but TPT is really solid, and it gives you that advantage, right? Apex, you do need 8 trading days between payouts. TPT, you can do payouts back to back to back. And ZK, who's in here, has done that to great success, right? Even just one account will pay you out a whole lot, because if you're trading 1 mini, you're trading 2 minis, even $500 a day is very realistic. And just like a cash account, you can pull that out same day. Yeah, man. I mean, 90% is that's if everything goes right, we're taking A+ setups, very, very possible and very realistic. What week was it? It was very recently in the month of October. We had 11 days of trading, 22 trades. I think 18 were winners, or 21 trades, 18 were winners, 2 were losses, and 1 was break even. So, let's say 18 out of 20, 9 out of 10. That was a real 90% win rate taken live, right? Every trade was taken on stream, and it's documented in the trades channel. So you guys can always just go in there and, for your own studying and back testing purposes, look at the setups we take, right? Find them in the chart and try to see, why did I take this trade? It's great. Some weeks, some days, I mean, we have 2-3 trades and it'll be a 100% win rate day that might go on for a couple of days. Very possible with this strategy. The key here is just discretion, right? Because well, let me complete my sentence there. Discretion and overtrading, right? You want to avoid overtrading, and you want to focus on discretion. Those go hand in hand because on the 30-second, on the 1 minute, there's obviously a lot of signals, right? There's 120 30-second candles per hour. There's bound to be dozens of inversions in that time. So the key is really discretion and understanding which setups to take and which not to take. So again, going back to my context guide, check that out. I just made it on Friday. That gives you that checklist of factors when it comes to, what makes a setup high quality versus a low quality setup, right? And taking too many low quality setups, you're gonna see a lower win rate. You might still be profitable, but you're gonna see a lower win rate. When you're sticking to high quality setups, let's just say 2 trades a day. There's always two. I mean, I won't say always. I mean, if it's a terrible day, there might not be 2 A+ setups, but there's at least 1 or 2, sometimes 3 A+ setups just in the morning session alone. If you can be patient enough to wait for those setups and execute, and let's say price is nice and volatile, we have news, um, you'll see that high win rate. This is not a setup to take because here significant liquidity, right? This was pre-market high, was swept here, right? And you see the reaction to that liquidity sweep. Price immediately reacts, fails to make a new high, comes back down. So we're making new lows and we're failing to make new highs. Comes back up here. This is not a long I would take. Okay. Yes, it's a 1-minute inversion, but it lacks that higher time frame context. On the contrary, there's a small short that could have been scalped right here for about 10 points. It's okay. Right, if you guys see this little 1-minute fair value gap here, we close below here. I just don't love this close, being that we swept this internal and it's fairly close to the target we would be wanting to exit at anyways. That's not an A+ setup to me. Here is the short that I was looking for. Okay, now this brings up another topic, which is taking positions that are in a conflicting fair value gap, a prior fair value gap, right? So in this case, if you see this 1-minute fair value gap here, we did inverse it. However, we're in this big 1-minute right here. So we inversed one fair value gap, but we were respecting and holding another, right? Prices coming into it, it's not inversing it. This is where we rely even more on that higher time frame context. So what do we see? We see New York low down here. That's our higher time frame draw, right? Being that price has shown a tendency. So we came down, right? We came up, swept high of day here, and then we're coming back down. Okay, so this is sort of some seek and destroy price action, which is just taking out opposite ends of a range. So we have our draw here. We have a bearish trend already established. We do get that 1-minute inversion. Okay. And then if we sell at the close here, stop. Personally, I would let price breathe a bit because we have a freshly formed 1-minute gap here. I'll change the colors on these FVGs so you guys don't get confused, but this is our inversion, right? Make it purple. This is our actionable entry. Okay. This is the fair value gap we closed below. This is a freshly formed 1-minute. This gap here. Okay. This is a bearish fair value gap. We want to let price tap this to protect our position, right? You don't want to be stopping out before price potentially just rejects this fair value gap. In this case, you see it didn't even come back up. But if it did, we want to give it the opportunity to reject and react to that. Because ultimately, an FVG is just an imbalance that needs rebalancing. And because the trend is bearish, we think the draw is bearish, we should see a reaction. So my stop would have been above this fair value gap. Trying to see where it was. Yeah, so I took this close here. My stop was in the mean threshold of this 1-minute order block. Mean threshold, just an ICT term, means halfway of an order block. So if you see this last candle in this retracement leg, this uptrend, my stop was halfway through that. Okay. And I'll clear out some drawings. But 1 minute order block here, clearly an order block because it was followed by displacement, right? So smart money, institutions, whatever you want to call it, they're selling this candle. They drove price up with the intention of selling. So my stop is halfway through that order block. That is one PD array protecting our position. And then our second PD array is this bearish fair value gap. So we're going to let price tap both of those. If we tap both of those and continue higher, obviously something is wrong with my trade thesis. It just doesn't want to work out. That's all good. That's a stop out I'm happy to take, right? I took the trade like I was supposed to, and my stop was where it was supposed to be, right? I gave price the opportunity. That's if it was a loss. In this case, it was a winner, right? We sell this close, price. This is my exit, right? I'm not holding till low of day down there, but I'm out here, good 25 points, 1.27. This is extremely high risk reward for me, right? Like this is a dream trade. This doesn't happen too often, but we had a huge wake there. We had multiple draws, so that worked out pretty well. So that was Wednesday. So just showing you guys some examples of the trades we take on stream. Again, all of these are documented in the trade section. Yeah, if you guys have any more questions, let me know now, please. Otherwise, we'll hop off here as we approach an hour. This week should be a good week. We have FOMC on Wednesday. Hopefully, market is a little bit more volatile. End of October seasonality, we're looking, let's see. So if you guys don't know, equityclock.com, spelled like it sounds, equityclock.com. You can look at seasonality charts. October generally closes at its highs. So that corresponds well with, what we're currently seeing, which is some really bullish price action, right? We're continuing to make new all-time highs. So should be another bullish week, should break above last week's high and just continue up from there. I don't really love all-time highs because our only draw is, usually previous day high. So hopefully we can form some ranges. But all right, if no one has any more questions, this is where we will call it. I appreciate you guys joining on a Sunday call. Good to see you in here. If you guys have questions too, just DM me, right? I don't care if you're free or premium. Just shoot me a DM anytime. We'll help you out. Yeah, absolutely. Glad you guys enjoyed this, found some value. You guys have a great day. New week, right? Hopefully you guys spent some time reviewing. Obviously you're on this call, so you're setting up for success this week. We're gonna crush it, right? End of the month here. Q4 already going by really quick. Yeah, let's get it. I'll see you guys in the chat. Shoot me a message anytime, and have a great day. Bye-bye.